Brent Crude Oil refers to a benchmark, which is priced out of the UK. It has just gained over time in terms of becoming the market convention for pricing the majority of oil outside of the US. That's the one that sets the price for a lot of Australian oil or index to that benchmark. And that's why you hear a lot this conversation around what's happening with Brent futures. But that's what it's referring to, and that's where it's priced. We're seeing this globally, this push to kind of release to make sure that any imminent shortfalls don't happen. And it's simply because this disruption is unprecedented. We're talking net supply disruption of about 14 to 16% of global supply with no spare capacity that can respond. We've never seen that before, right? Even if you go back to the 70s and some of the major shocks there, this is by far the highest. So when we talk about these releases and why it's so sizable, particularly from bodies like the International Energy Agency, it's to address this market worry that we're going to run out of fuel. Right now, there are two things that are contributing to this shortfall. One is clearly supply chains are adjusting. If you look at what's coming out of the Persian Gulf, the Strait of Hormuz, all the disruption, you can imagine all the tankers are there like at a traffic light. And so really the issue is, okay, we have to redirect, we have to move somewhere where we can use these ships, and that's going to take time. And there's some evidence that's happening, but not clear evidence just yet. But the second part that's making this situation much worse is hoarding. And that's when a lot of people are buying more than what they use, just in case this disruption proves to be that sizable. And that's what's accelerating the shortfall concern. After a while, supply chains will normalize. You'll get tankers coming through, delivering the oil and the refined products that Australia needs.